Welcome to Smith Weekly Discussions, an occasional program for our readers and listeners of Smith Weekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. Before we get to our show today, we want to say thanks for questions coming from our audience at Smith Weekly, including Miko L., Dale H., at Quick Sticks, Alan B., Randy L., Peter S., and Yoki L. We have on Steve Roman, Chairman, President, and CEO of Global Atomic Corp., an Azure-focused uranium developer advancing the Dasa project. The company also has a non-operating interest in a zinc concentrate facility in Turkey. The company is listed on the Toronto Venture Exchange under the symbol GLO, and on the U.S. OTC markets under the symbol SYIFF. Steve, welcome to the show.
Thank you, Andrew. A pleasure to be here.
So you've had some diverse time in the natural resource business going back a number of years. Take us through some of the highlights and then give us some of the key lessons you've learned over the years that really are some keys for the audience to take in.
Well, just to give you a little bit of my background, my father, Stephen B. Roman, in the 50s discovered the world's largest uranium deposit at the time and built a town called Elliot Lake, Ontario. His company was called Denison Mines Limited, which actually still exists today. I first went underground with him when we were building Denison at 5 years of age. And it was a contract with the U.S. Atomic Energy Commission during the 50s that really helped finance and bring that mine into production. So with a contract to supply United States with uranium at the time, he was able to go to a bank and get bank financing to fully build out that mine and milling facility. So my introduction to mining and uranium happened then in the late 50s, early 60s as a young kid. And when I was 19 years old, I actually started working underground as a miner in the uranium mine and went through the Ontario School Stope training program, received my miner's certificate, subsequently took geology at university, and started working for Denison Mines in various activities. The last job I had there was a VP of exploration, and I was involved at that time with, exploring worldwide with, the focus on uranium, but also on other projects like gold projects, potash projects, and coal projects. So we had an excellent team at Denison, of course. We spent a number of billions of dollars developing projects around the world. One of our biggest was the big Quintet coal project in northeast British Columbia, which was a $3.8 billion project involving governments, 55 banks, and Japanese steel mills that bought the coal from us and Tech. So about 1990, my father passed away in 1988. There was a lot of changes at Denison Mines. The board had changed, the management changed, and my division, unfortunately, was shut down, and I went out on my own about 1990-91. And the first big success I had was a discovery of a gold project in northwestern Ontario called Gold Eagle, and I sold Gold Eagle in late 2008, just before the financial crisis, to Gold Corp for $1.5 billion. And with that money and of course the big wins I had with our shareholders, they financed me to go and find other and create other companies. So actually in 2005, I incorporated Global Atomic Corporation, and we started initially with exploration in Africa. So about 2007, I acquired 6 concessions in Niger, and the reason I went to Niger is really because the permitting regime in Canada for uranium projects is is a very long, arduous process. While at Denison, of course, I went through all of that. I did exploration in Saskatchewan in the Athabasca Basin. And, some of our projects, for instance, Midwest, took 30 years to permit and get into production. It just, for me, was just too long to wait. So Niger was just opening the doors in 2005 to foreign investment. It's a former French colony that gained independence, and they really wanted to attract foreign investment. So I was in there very quickly, probably one of the first companies to move into the area. Niger, for our listeners, is the fourth largest uranium producing country in the world, and it supplies 30% of France's uranium. France probably runs the largest, countrywide, gets most of their power from nuclear reactors. So Niger was a very important supply source for them, and of course for the government, it's a main contributor to their GDP. So with these 6 concessions, we started our exploration back in 2007. Of course, we hit a nice uptick in the uranium prices, where they went up to about $130 a pound, and we raised money in the company and actually started developing a couple of known prospects on those concessions, and we actually outlined a number of millions of pounds, both at Tinigaran, Daji, and Isakanen. But then the big Dasa discovery came at the end of 2010, and at that time, just prior to, of course, Fukushima happened in March of 2011, we managed to raise with some very large players in the UK. Once we announced its discovery, we raised about $25.5 million, with JP Morgan being the lead investor out of their UK office, as well as Macquarie and Investec out of South Africa. So that allowed us to really focus on that Dasa project and do about 100,000 meters of drilling in that deposit to move it up the curve. Now, since then, of course, and you can stop me where you feel appropriate, Andrew, but just giving you is sort of the background on the company. This was all done in a private company, so Global Atomic was private. At the same time, in 2005, I incorporated a base metals company called Silvermet, and we were focused on, finding base metal projects, primarily zinc and nickel. So I'll get back to that one. But the Dasa, of course, turned out to be a very significant discovery. It's actually now known as the largest, highest grade uranium discovery in Africa in the last 50 years. The ones previous were the ones discovered by the French in a place called Arlit in Niger, where they have 2 operating mines, Cominac and Sommer, and they've been running since about 1970-71. So really, the Dasa is something that's it's larger and higher grade than those deposits, and so this is something now that we're moving through the feasibility process. In July of 2017, after a number of years of discussions with Areva, at the time it was known, now it's known as Orano Mining. We signed an MOU, a Memorandum of Understanding, whereby we would do cooperation in Niger, and they would be able to study what we'd found at Dasa with the idea of potentially supplying a source of feed to their mills in Arlit. So we're about 80 kilometers south, about 50 miles south of their operating mines. Right on the main highway, the infrastructure is all there. The power line that supplies those 2 operating mines goes right over our property. So we're in an excellent location. And similar to Saskatchewan, there's a number of deposits that typically would feed a centralized mill. This is the way we see the Dasa developing. So we have 3 mills within 100 kilometers of us currently, all the infrastructure there. And we don't really foresee the need to spend the capital and build our own mill at this point. We should be able to just mine via open pit and ship ore directly to any one of those mills, or all 3 of them for that matter. So right now, this is developing with the idea of supplying ore to Orano, at least to 1 mill, potentially both. And so that's what we're working on now. We've just released in the last week some additional drill results from 2018, and we are now doing a new updated resource and a new mine plan, which will be all incorporated into the feasibility study, which will be focused on basically a mining and trucking operation.
Okay. Well, I appreciate the extensive background and coverage there. You covered a lot of points and things. I want to go back for a moment before we talk about Global Atomic specifically. I want to go back to your old man. What would you say that he provided you with some skills and lessons when you were going through your early stage experience in the mining business, and specifically with uranium?
Well, he was a tremendous entrepreneur and a very savvy businessman. He just had that knack, and he knew how to make deals and make money. He was an immigrant from Slovakia that came here just prior to World War II. Then he tried to get back to basically fight the Germans during the war, but he ended up in a munitions plant here, and he just started prospecting as a young man and ended up finding that big deposit, developing it effectively on his own without losing control of it, and building up a tremendous large organization that was involved with many different businesses aside from mining. Now, having grown up in that environment, of course, he had to work for everything he had. He didn't give me anything except, a job if I wanted it. But, he always told me that if you want to make money, you have to earn it yourself. Of course, I was very interested in the outdoors, in mining, in prospecting. I think it's in the blood. His father, my grandfather, actually came through Ellis Island 3 times in the late 1800s, early 1900s to work in the coal mines in Pennsylvania and Ohio, and he would stay for years, ship money home, and then go back home for a visit and come back. So I think that the mining is in the blood. And, of course, the fact that he was a hard taskmaster and didn't give me anything except as a job, as I mentioned, he basically said, listen, if you want to learn the business, start at the bottom. So that's where I started in the mines as a miner, and basically progressed up through the ranks into engineering, mine development, sales of product. I mean, the whole gambit from soup to nuts. This was all learned firsthand by doing the job. So I didn't learn it in school as much as I learned it actually doing it.
Yes, and I think that's the prevailing point, and a great history you provided, and it's so much how much key experience is on the ground doing stuff rather than reading out of a textbook. I think it's a key point that you bring up. So we won't talk too much about Gold Eagle, but great timing on that. But talk to us just briefly about another subject. And I know you still have an appetite. Obviously, you're still in Canada doing some things and you have an appetite there. But for our audience that is probably unfamiliar, go back and tell us about your role in the Volta Grande deposit in Brazil, and tell us your thoughts on if that project will get advanced.
So I started a company here and took it public. It was a private Brazilian company. I took it public here in Canada and put it on the Toronto Venture Exchange, similar to where Global is now. And it was called Verena Minerals. And Verena was involved in exploring quite a few different properties in Brazil, and the Volta Grande property came to my attention. Oh, it's 10 years plus ago, but it had a lot of sort of local garimpero type workings on the property, but it had never been explored. So we picked it up and started working on it and started developing a resource. And so when I moved this thing along from basically a startup situation to about 2 million ounces, we figured that there was still a lot of exploration to do on the property. And at that time, of course, we made a deal with a fellow named Stan Barty, who had just taken over, I believe it was Anglo American's Brazilian mining operation, and had a full complement of very qualified mine development people situated in Brazil, headed up by a guy named Peter Tagliamonte, who is now running Belo Sun, which is the new name for Verena. And there was a big fundraising at the time when we made that whole deal and took on this new management team. And with the additional capital, of course, they drilled off about a 10 million ounce resource on the property, of which now there's a feasibility study on a large portion of that. Now, this project was located on the Xingu River, which is a tributary of the Amazon, in thick jungle. So, when we were working there was, we had a camp established there. We had a lot of people working on site. And what really got the whole thing moving ahead was that the Brazilian government decided to build a large dam, power dam, I think 11,000 megawatt project, just down the road from us, not too far from a town called Altamira. So that really opened up the whole area and brought in infrastructure, etc. So that really excited everybody, the fact that, okay, with this going on here, better infrastructure, more people in the area, this mine's going to go ahead. The feeling right now is that obviously this will be a mine. I mean, there's a big resource there. There's a lot of high grade there. Infrastructure challenges and location was something to worry about in the early days, but it's really not now. I think it's all boiling down to political will at this point. And of course, in Latin America, sometimes it takes a long time to get people on side. It's maybe a little bit like permitting in Canada. You always have some new angle coming at you, whether it's indigenous issues or, in Brazil, maybe they have to have certain politicians on side to give you approvals. But as far as I'm concerned, the mine will go ahead, and it's just a matter of time till they get all their permits so that they can move it ahead. Belo Sun, would like to have potentially a senior partner or somebody that could provide some more financial horsepower for the development. But I think they've got some options now on starting with a smaller sized operation. It's not going to take a lot of capital. And that's what I would recommend. I wouldn't wait for some big guy to come there. I know Agnico Eagle was there with a position at one time, but I believe they've sold their position in the meantime. I think they should start small and just do what we've just presently done at Heart Gold, another company that I've developed here in Canada, is to start a small mine, high grade, start generating cash flow, and expand your operation subsequently. I mean, you don't have to go in there with the multi-hundred millions of dollars project. start with something that's, in the 100 to 200 million range that a smaller company can actually finance.
Yeah, I agree. I think there's some key points you brought up there, and I appreciate the background on that project and how it's coming together. So I want to move kind of to broad uranium market for just a moment before we go back over to Niger. What are the key things in your mind that needs to go in place at this point for the uranium price to kind of start moving higher?
Well, I think obviously the big guys like the Kazakhs and Cameco have curtailed some production, dried up some of the market. I think utilities really have to get back into the market and start signing up some 10-year contracts like they did in the past. I think the price has been so low, everybody's just been nipping away at the spot market and trying to accumulate. There's been a lot of refined, processed uranium on the market. There was too many refiners out there dumping too much product. I think some of those are shutting down. That's going to dry that market up a bit. And of course, the big driver is going to be the continued development of nuclear power plants in China and India, I would say, particularly over the next few years. And there's other places in the world now, like Saudi Arabia, that are building a number of reactors that nobody expected. And, people are realizing that, particularly the Saudis, why use up all their oil to develop their country when they can build a reactor, they can produce water for irrigating their land, and make it a more livable environment without chewing up their main natural resource. So,
Right.
I think just the scale of the amount of reactors that are being built here over the next 10 to 20 years, I mean, the fleet's going to double in size.
Right. Yeah, I think those are some key points. And let me ask you this. You mentioned contracting for a moment. Looking at the U.S. and European utilities, what's your thoughts on when the U.S. and European utilities will start to move into the market? Do you see that happening kind of at the same time? And do you see them both kind of hanging out? Obviously, we know we got to get 232 out of the way. But after that happens, how do you see European and U.S. utilities coming into the market? And when do you think that might start?
Well, that's a good question, Andrew. So far, they've been pretty fickle, and they haven't really shown their hand as far as when they want to get back into the market. We know France is trying to develop a couple of projects, and they're going to need to buy uranium. Some countries have decided that they're going to slow down on their nuclear development, but at the end of the day, everybody's promoting the fact that it's the only solid base load carbon-free energy source. And I think more people are going to start getting on board with that. I think probably it's going to be another year or two before you really see big movement in the market from utilities. But that's just my opinion.
I think that seems to be that we're lining pretty good with same dates that you're coming up with there. I think we're pretty close, but maybe have a couple more years out there to be conservative. So let's go back to Niger. You've got kind of one major competing country to Niger in Africa for uranium export, and that's Namibia. What's your thoughts on Niger versus Namibia in terms of jurisdiction? Do you like them both? Is there one you like better?
Well, Namibia, I think, is a good place to operate. I think Niger, of course, has better deposits. So Namibia's deposits typically are very low grade. They're going to require a lot higher uranium cost to actually make money there. Our project, Dasa, particularly with the grades we have, can make money today. We don't need to wait for $40 or $50 a pound uranium. So from that point of view, Niger has got a very good mining code. They've got a good tax regime. Uranium is their number one GDP revenue source, so they're very proactive trying to develop more uranium projects in the country. Namibia, I'm not entirely sure what other sources of revenue they have in the country, but I think uranium is obviously one of the big ones. But it's just the quality of the deposits in Niger are better.
So let's get to Global Atomic. Give us kind of a snapshot briefly of the management team, the capital structure, maybe some key insider ownership, and then lastly, how management is aligning themselves with that of the shareholders today.
Okay, well, I started the company with the ex-president of Denison Mines, Clifford Frame, in 2005, as I mentioned, and we basically seeded up the initial company and started doing the exploration in Niger, and so from an alignment with shareholders, basically I've put my own money into the deal from day one, and participated in every financing going forward. So we're totally aligned. I'm probably the largest shareholder of the company with just around 10% right now. Clifford is probably second after me. And then a couple of institutions in there like J.P. Morgan, and I don't know about Macquarie and Investec right now, whether they still have their shares or not. But, really the shareholders initially were all the management. And, of course, our other key guy, Mr. George Flack, our VP Exploration, he's also a director. He's been involved since day one. Has his own money in the deal. So as far as, participating and having skin in the game, we're all there. Management team, we have some exceptionally good people involved with us on the as directors. The ex-COO and president of Iron Ore Company of Canada, Derek Rance, he's a South African mining engineer. MBA, we've got a fellow named Richard Fauché, who used to be involved running projects for Falconbridge. He ran their operations in Dominican Republic. We've got a guy named Paul Cronin, who used to be running a uranium company called Anatolia in Turkey that got bought out by a U.S. group. All people that are either mining engineers, geologists, metallurgists, or financial people that were involved. Like Paul was head of mining at Rand Merchant Bank, and that's where we met initially. He really liked the Dasa project, and he eventually came on as a director. So, I think to answer your question, our management team is excellent. We've got a new guy we hired as executive VP, Merlin Marr Johnson in London, England. Merlin used to be with HSBC. He was involved with a number of companies, running them as a CEO. He just joined us in the last few months. So, of course, a lot of our big shareholders are based in London. Most of our financing came out of London. They seem to have an affinity to African projects, whereas, in North America, we typically like to go north-south, and people like Canadian, American, and South American projects. In the UK, they like African projects, so there's always a big interest out of London. So we have a representative there now. We have an office there. And we expect that as we move this forward, we're going to have more interest coming out of that market.
So back around May 2018, there was some attempts to clear out the management team by some shareholders. Tell us how that got resolved, and is the current shareholder roster in support of company management and the direction of the company?
Well, there was a couple of people that were involved in our zinc business. So you mentioned that we have a zinc component. So the way that came about is I started a company also in 2005 called Silvermet, as I mentioned, And we ended up during the depths of the financial crisis, end of 2008, buying a shutdown plant in Iskenderun, Turkey, which used to reprocess electric arc furnace dust. It's a waste coming out of electric arc furnaces that contains a lot of zinc. And it's a big kiln. It looks like a cement plant. It's got a 55-meter long or about 60-yard long kiln that basically cooks this waste and volatilizes the zinc, and then we condense it and we turn it into a high-grade 70% zinc concentrate that's sold to smelters. So we had that business going. We basically turned the plant around, refinanced it, cleaned it up, and it's been making money since 2009. Now, since that wasn't one of our primary businesses, we made a deal with the biggest group in the world called Befesa Zinc. They were a Spanish company, part of the Abengoa Group. Now they're trading on the Frankfurt Stock Exchange. I think they have about $1.5 billion market value. So we brought them in there and sold them a 51% interest in that project. They wanted to get into Turkey. They could see doing a deal with us was a very quick way for them to get into that market. They're the biggest in the world. They operate a number of plants in Europe and Asia. And so they are now the operator of that project. And so what we did, since we weren't really getting a lot of love in the market, nobody really knows too much about the recycling business, and it's not that sexy from a point of view of market, but from a point of view of making money, they make money. So what we did is we took that company, Silvermet, which was public, and we merged it with Global Atomic, which was private. Now, of course, we polled shareholders to see what they'd think about that idea prior to doing it. All the shareholders were in favor. They wanted to have liquidity of the global shares. They thought that a new great high-grade uranium project would also enhance the value of their Silvermet shares. So everybody wanted to go ahead and do that. And, of course, there was a lot of cross-pollination, so to speak. There were Silvermet shareholders that were global shareholders and global that were Silvermet shareholders. So it made a lot of sense to do the combination, take the whole thing public. But then at the 11th hour, of course, a couple of shareholders decided, well, they just want us to dividend all the cash out of the zinc company on a continual basis, and they decided they don't want to do a combination. So they voted against it and tried to put in a new slate of directors and scuttled the deal at the last minute. So, of course, we had an annual meeting, and the whole thing went to vote. These groups, there was two groups particularly, were basically totally eliminated. Their votes were washed out by all of the people voting in favor, and they've since disappeared. So we've asked them whether they wanted to sell their shares. They so far as I know, still own their shares, but they realize at this point that it's a futile exercise to try to change the course of the company.
Right. Yeah, and I think at this point, at these market levels and these sentiment levels, it doesn't make much sense either. So they better just probably stick with it and draw on your management team to create value going forward. I think that makes the most sense at this point. And at these levels, I'm sure that probably makes the most sense across the board. So,
well, you know what? At the time when they did it too, they, everybody, of course, read all the material, but they had no plan. All they wanted to do was scuttle the deal and dividend all the cash flow out of our zinc operation to themselves. So, everybody said, well, what kind of a plan is that? So they basically just didn't vote for it.
So how do you see zinc prices over the next couple of years, and what's your view on the current zinc supply levels?
Well, a number of large zinc operations have shut down. So, that's really created a bit of a deficit in the zinc market, and you can see with zinc prices now about $1.35 a pound. that it's in a very favorable position. I think there is obviously some additional zinc production that will come on stream at these kinds of prices, but I think we're going to have a pretty decent price level here north of $1 for a number of years going forward. The other big input that I think people need to understand is that zinc is used primarily for galvanization. There's a lot of galvanizing going on now with steel production in China, so they're using more zinc. The other big impact on zinc is now people realize that a lot of soil in North America is being depleted of zinc. So we grow a lot of corn in Canada and the United States. That really depletes the soil, and they're finding that the zinc addition to the soil is actually strengthening the soil and the growing characteristics of the soil. So, people wouldn't think normally of throwing zinc on the field, but they're doing so. And, that's using up a lot of zinc. So, I think from a point of view of supply, the supply is limited, but demand is growing. So I think that zinc's pricing is going to stay quite strong for the next little while.
Yeah, I see that there are some interesting things coming out of that, specifically on the agriculture side that you mentioned. So a little bit more on the zinc for a moment. So you guys have that asset. You guys are receiving money from that asset. What's your thoughts on how that goes forward? Is there a desire in the company to potentially sell that asset if the price is right, or just continue to kind of collect, and that really the aggregate of that collection over time is better? What do you see there?
Clearly our partner, Befesa, would like to buy our 49% at some point. At this point in time, they've got other operations they're really focused on as far as, growing, for instance, their expansion in Asia. I think, for the moment and for the foreseeable future, as the fact that we're doubling the size of our Turkish operation currently, you'll see some news coming out on that fairly soon. But, the market, I think, is aware that we're modernizing and increasing the size of our plant there. So, if zinc prices stay where they are, that's going to kick out a very significant revenue stream to Global Atomic, which really underpins the development of the Dasa uranium project. So, I don't think we actually ever have to come back to the market to develop the Dasa project. So, our share capital right now we have, and you asked that question, we have about 140 million shares outstanding, which is, I would say fairly tightly controlled with management directors and friends probably have in the 30 to 40% range of that share capital. The rest is, some institutions like J.P. Morgan are in there, but the rest is smaller retail. We don't really foresee having to issue more shares with that cash flowing asset that could supply sufficient capital to develop the Dasa project. Now, with our deal with Orano Mining, if we just start a basic open pit and a shipping operation, we don't need a lot of capital to get a mine going.
Right.
And with those revenue streams, so we have a revenue stream coming from zinc, we have a revenue stream coming from uranium. As far as I'm concerned, as a big shareholder, I'd like to start paying dividends to our shareholders. So, I think the company should have an aggressive dividend policy and start sharing those profits with our shareholders.
Okay, so on the zinc, so you mentioned the expansion. Can you give us right now, with as it stands today, and also when the expansion is complete, give us the thoughts on how that expansion is financed, if there is no issue with we can do that with existing capital. And then also give us the all-in cost of that facility now. What do you need per pound zinc to make sure that we're break even at this point?
Okay. Right now we've got a plant that's basically designed for about 30 million pounds of zinc production annually, about 50 to 60,000 tons of throughput capacity of electric arc furnace dust. The new plant will be able to treat between 110 and 120,000 tons a year of furnace dust, producing about 60 million pounds a year. The current plant, I would say, our costs there are probably in the 45-cent range. You know, that wouldn't include smelting charges, but smelting costs have been coming down as there's less and less zinc available. The new plant should drop that, I would say, down to probably in the 30-cent range. So you can see if the zinc price is up at $1.30, which it currently is $1.35, you've got a tremendous margin there for shareholders.
And what's the expansion cost to Global? And after that expansion,
okay, sorry, I forgot that one. The new plant costs $26 million US. So of course we pay 49% and Bethesda pays 51%. This is all being funded through our own cash flow. So we paid a dividend out to the company, which we used to finish the drilling in 2018 for the Dasa, but all of 2018's cash flow is been set aside to build the plant. So between our own cash flow and existing credit lines that we have in Turkey, we are fully funded on that project.
Okay, excellent. And after that is completed, is there any ongoing day-to-day costs or operations that Global has to contribute to once that goes? I mean, is it just a true 49%, or how's that work?
Yeah, it's a true 49%. You know, we have a very good relation with Bethesda. We have monthly meetings. So no, we of course produce the zinc concentrate in Turkey. It's loaded right at our own dock. Effectively, we're right mixed in with two steel mills in Iskendron, right on Tidewater. So we load containers and ship the material to Europe. Glencore and Nearstar are our two biggest clients there, and of course they pay us in US dollars in Europe. So then we have to send sufficient working capital back to Turkey to keep operations running, but effectively all of the cash flow is in US dollars outside of Turkey.
Great. So let's move on. Let's focus down on Dasa for a moment in Niger. So you've got kind of a few peer companies, specifically kind of one there in Niger, in Goviex. What would you say is better about Global Atomic, and what negative things do you see with the deposit, and positive things as compared to the peers? I know you mentioned grade, but maybe give us kind of a flavor for why you think the Dasa project is really kind of the key project in Niger.
Well, size and grade, really, Andrew. I mean, the Dasa project, the mineralization starts on surface. Through our drill programs here in the last year, we've discovered this area we call the flank zone, which is just below surface. It's very high grade. Below the flank zone, we have, a number of other zones. In funny enough, in Niger, there's never been a uranium deposit found in three different horizons, being the Carboniferous, Jurassic, and Triassic. We've got mineralization in all of those zones, and we've now traced it down to about 800 meters below surface. So this is something that could create an open pit that's 3 or 4 kilometers long and 2 to 3 kilometers wide. I mean, this is a significant plus 200 million pound deposit. There's just not too many animals like that right now in the world. The grades, of course, We put out a press release this week. We've hit some exceptional grades, even some that are grading over 20% uranium. These are as good a grade as you find in the high-grade deposits in Saskatchewan. Frankly, one of our people that work with us, and I didn't mention him when we were talking about personnel, but we've got an ex-Areva fellow. His name is Dr. Peter Wallenberg, and he was the head of exploration for Areva in North America, and he discovered the big Gigavik deposit in Northwest Territories. So he's part of the Global Atomic team now, and he presented at the Prospectors Convention here in March, and he said this is the biggest, highest grade sandstone hosted deposit in the world. So there's really, GoviEx has done a lot of work on their Matajuela deposit. It's more of an underground target from what I understand. They could have some open pittable material, but the grades are nowhere near as high as what we have. The deposit underground has been mined, I think, in the past. It was an old, they had a test mining program there. It's quite thin, the seam that the uranium is in, so it just can't compare to what we have at Dasa. And GoviEx is working hard to get their project going. They have some other elements mixed with the uranium. They need a much higher price to get that project going. I think they're in the $70 to $80 range, whereas we could start mining right now.
Well, I appreciate the perspective on that. Let's talk about the letter of intent, or the MOU you have with Orano. That's not quite 100% in concrete yet. Give us kind of what will be paid to Orano for processing at their facilities, and what is the limit of the responsibility once the material arrives at their facility, or how does that kind of work? And then does Global retain 100% ownership of the Dasa project, or do you see some kind of a JV coming out of this MOU with Orano?
No, we retain 100% of the project, and the MOU basically specifies that they will buy the rock. So they will pay us for the uranium in the rock based on spot price. So we are still working out the details on, whether they're going to pick it up at our mine gate or we drop it at their mine gate. They know what their operating costs are, and what we have to figure out is how much it's going to cost us to mine the material and truck it to their site. So, in rough numbers, the way we've calculated this is we don't think it's going to cost more than $8 to $10 a pound for them to process that material. Our mining and trucking shouldn't be more than $10. So for $20 all in, we would be able to mine and deliver material to their mill. Uranium price, at the $26 to $30 level would give us a margin of, $6 to $10 per pound. So depending on the tonnage we supply, now the MOU contemplates a minimum of 100,000 tons delivered to their plant per year for a minimum of 5 years at a minimum grade of 1,000 ppm. Parts per million. So, of course, we anticipate that as we move forward here, we'll be able to announce definitively how many tons we'll be delivering, what the grade will be, and what the costs are going to be. So right now we're working on all of that. We're going to be putting it into a final feasibility study because we need that in order to get our mining license. In Niger, compared to Canada, a mining license, once you have your feasibility done and your environmental impact statement done, takes 4 to 6 months to get your mining license. So we expect we'll have that feasibility with all the right inputs, all the right numbers plugged in by, let's say, the end of Q1. By the end of Q3 next year, we should have our mining license. We can actually start moving dirt, by the end of next year.
Give us a time frame on when that MOU will become in concrete. Do you have an idea on when that might get resolved?
I think in the next 3 months we should have all of those issues resolved. but not really resolved, but the final I's dotted, T's crossed. How many tons do they want? Where do they want it? What's their process cost going to be? And then we need to have those numbers so we can plug it into our feasibility model. Clearly, we're not going to ship ore unless we can make money. So that's the bottom line. So if they need ore, their mines are, depleted or near depleted. They need to keep all of those things going. They've got a lot of employees up there. So, I would say, generally speaking, it should be a situation where it's beneficial to both companies.
Okay. And when you look at the processing costs, when you guys get that determined, how does the processing costs over there at their mill come in when you guys evaluate maybe a future plan to potentially build infrastructure and build stuff at the project, depending on how big that project gets? Do you see that their processing costs would be in line with what you guys are envisioning perhaps in the future?
Well, you know what? As I mentioned earlier, we have 3 mills within 100 kilometers of our mine. So, I think it would have to be something quite significant for a company like Global Atomic to decide, well, they're not going to feed these mills on some toll arrangement and build their own mill and spend, $300 or $400 million doing that. It would have to be something that would be substantially lower, I would say, to take on the risk of building your own plant. So I just think that that's something that could be, out in the future, depending on what the uranium price is doing. I don't think anybody out there seems to think uranium is really going to, go back up to $100 a pound. I think, thought is, generally speaking, $40 to $50 a pound, which would keep a lot of low grade projects off the market. Cameco, I think, mentioned here during PDAC that, they wouldn't contemplate bringing McArthur River back online unless prices were around $40 a pound. But, if people start, like Cameco and the Kazakhs, start bringing on additional production at $40, that's great for us, but it's not good for a lot of low-grade projects that I don't think are going to make it.
And do you see with uranium coming back at $45, $50, $55 a pound, do you see that is a price that can sustain the more or less bottleneck and deficit of supply that would be starting to occur when the utilities recontract? Do you think that there's enough supply there to really meet all the world demand at that price level, or do you believe that there's really a price higher than that really gets enough supply into the market, given, of course, all the time it takes to get there? What's your thoughts on that?
Well, I think if prices were up at the $40 to $50 range, there would be enough decent higher grade projects that come back online or start up to supply the market. I think the reactors are becoming more efficient. I think they're using less fuel. I think there's the potential to recycle some of these fuels that have been in storage, underwater storage for the last 20 or 30 years. There's going to be some addition to supply with some of this kind of recycling. I don't think we're going to need vast quantities of new uranium coming on stream, but I think, of course, there's going to be that base supply that's going to be required. I think right now, current reactor fleets are probably using between 180 and 200 million pounds a year. With the substantial more reactors, that could go up to 3 to 400 million pounds a year. But I think that Cameco, Kazakhstan, Russian production, etc., they're going to be able to fill a lot of the void.
If the deal with Orano for some reason doesn't materialize, Steve, what do you think the backup route would be?
Well, if it doesn't materialize, we have one other, actually a couple of players in Niger. The Russians are there. They've approached us because they have a low-grade deposit there. I know they're looking for uranium deposits in Niger. So are the Indians, and the Chinese have a plant in a place called Azalik, which is one of the three that I spoke to you about. And the Chinese are definitely looking for more uranium supply. So, I think we have other options if Orano doesn't pan out. But I think we'll do well regardless of Orano or no Orano.
So talk to us about Niger taxes for a moment. Give us an overview of the 10% interest, the income tax rate, and the sliding scale royalties. How does that kind of figure into this type of scenario and your total cost?
So when you go and you receive your mining license in Niger, you have to form a new uranium company, a new mining company, a new mining entity. So it would be called Dasa Mining Corporation. The government gets 10% of the shares of that mining company. So they don't actually have an interest in the project. They have an interest in the shares of the mining company, which I guess is probably about the same thing. But and they have the option to actually, by funding pro rata their share, go up to a 40% interest. So basically, Global Atomic would have 60% of the mining company at that point. The government would have 40%. Now, this is typically not the way they operate. They do have a large interest in the Cominac project. I think they're around 30%. Initially they start with 10. The tax rate is a 30% corporate tax. You get a 3-year tax holiday. You don't pay VAT on anything you're bringing into the country to develop your mining project. And then there's a sliding scale royalty that goes from 5% to 12% based on profitability. So if your project makes a 20% profit, you're sort of at 5%, and if it runs up to 50% profit, then you're going to be paying a 12% royalty. So it's a sliding scale based on profitability, and that's, of course, after you get all your capital back, et cetera, et cetera. It's a fair and reasonable tax regime that they have in Niger. If projects are marginal, let's say, you can negotiate your tax regime with the government there, and, they will try to tailor the taxes to benefit the project and create jobs.
Yeah, I think that makes sense, and at least the royalty is not coming off the revenue top line. So that's
correct.
Yeah, that's good. So going back to Global Atomic and strategy going forward, do you see the company as a potential buyout in the future, or do you really see that there's a desire to seek out this strategy of hauling ore to Orano and kind of really becoming a producer in this sector and kind of just hanging out for the new cycle?
Well, you know what, Andrew? I come from a mining background, and of course, uranium mining is what we were mining most of my years. I think it's very exciting to put the mine into production and start the shipments. Clearly, if somebody comes in the door and wants to buy the whole company, you have to go to shareholders if it's a reasonable offer and show it to them. So, we were building the Gold Eagle project. We'd already ordered equipment for the shaft, etc., when Gold Corp came in the door and decided they wanted to buy this thing. So, you know what? You have to take each project, each issue day by day as far as that goes. We know that the project is starting to get a lot of interest from various parties, including the French and the Chinese and the Russians. So at this point in time, we're here to develop the project. We have an excellent project running in Turkey. The new plant will be coming on stream this fall. So, as far as I can see, we're going to build a really nice cash flowing machine here, and we want to share that with the shareholders.
So, Steve, you've been around in the business for quite a while. Are there any other people or companies you'd like to mention that are notable for people the audience to look into, specifically in either the natural resource sector or the uranium sector at this point?
Well, there's actually, quite a few out there, Andrew. I don't know where you would start to sort of picking and choosing which company you want to talk about, but yeah, I mean, I'd rather stick to what I know here and just talk about global, I think.
How about in the sector? How about for uranium in the sector? People that are not part of companies per se that are listed. How about any? Is there any veterans or good knowledge bases that you have found throughout your years in this business that is good for information?
Well, I would have to say Cameco. I mean, if in the uranium sector, Cameco are, the biggest in the world, and of course, their main production is here in Canada. They're well established. I'm a shareholder of Cameco. I have been for a long time. They've got some fantastic projects. They're high grade. They've got good management. The Kazatomprom recently went public in London. So that might be something. I mean, those two big producers. I think if you're owning uranium, you got to own a bit of those. Cameco also pays a dividend currently, so those would be the ones that I'd probably focus on. Some of the others that have been out there promoting, their projects are marginal in my estimation. So I don't know if I want to really start mentioning any names because, everybody has to move their projects forward the way they see fit, and I don't like poo-pooing on anybody's project.
Sure. Well, tell us for just one sec as well. I want to ask you this. Going back to Athabasca Basin, you know this area quite well. What's your thoughts on the uranium projects there and some of the players, and kind of compare it to why? Just give investors a flavor one more time. Why you think Niger is so much superior in your view and your style as compared to kind of hanging around in Athabasca Basin?
Well, I am a shareholder of two companies in Athabasca on top of Cameco, as one is Fission and one is NextGen. Now, both of those companies, of course, have found some fantastic deposits there. The issue with Canada and the Athabasca is the permitting timeline. So if you are a young fellow of 25 years and you don't mind waiting for 20 years to get your mining permit, then it's great. But I'm an old guy that's been around for a long time, and I just like moving projects ahead a little bit faster than what the Canadian bureaucrats do. So I was very happy to go to Niger and work there. I've been working in West Africa since 1985, developing various projects. So I had no issues going to Africa and finding something good that could actually be permitted during this uranium cycle. I don't know, frankly, whether even NextGen or Fission will be permitted during this uranium cycle. I think that's very important for people to do their due diligence on it. I know that these companies have been promoting the fact that they can get their permits, within 5 to 7 years. But I just built a gold project in Ontario, and it took me 7 years to permit a gold project. And now uranium is a whole different bailiwick in Canada. It comes under much more scrutiny. There's more public consultation, and it takes a long time. It's very frustrating. So, I hope for the sake of shareholders, as I'm one of the shareholders of NextGen and Fission, that they can move things quickly. But I'm concerned if we have a good uranium cycle here for the next few years, they may miss the cycle before they get their permit.
Yeah, I think it sounds a little bit like a headache, and certainly quite a bit of gray and white hair coming out of that. And we're going to build a watch and see how this goes as the cycle plays out. So why should investors be taking a stake in Global Atomic today? What would you say to potential investors listening?
Well, I'd say, first of all, we have a world-class Tier 1 project in a jurisdiction that allows uranium mining. It's their number one revenue source. Very quick permitting regime, very skilled workforce in the uranium sector in Niger. Their mines have been running there since 1970, 71. So we've got all the components here for a very successful operation. We've got 3 mills in the area. All the infrastructure is there. But I think potential investors need to realize that we are actually a profitable company. So we are generating profits from our zinc operation that's really underpinning the development of this, billion-dollar asset. We have a current market cap of about 60 million Canadian dollars, so like 45 or 50 million US dollars. The NPV at like 8 times EBITDA just on our zinc project is 100 million, and we're trading at below that. So you really get the uranium asset for free.
So how can potential investors reach out to the company for more information?
Well, we have a website, number one, www.globalatomicorp.com, or, send me an email at sgr@globalatomicorp.com, and, we'll answer questions.
Steve, we really appreciate the time, and we look forward to watching Global Atomic going forward.
Thank you, Andrew. It was a pleasure.